What is going on, everybody? Welcome back to Trading Learning 101. Today's video, we're going to talk about Fibonacci retracements. What are Fibonacci retracements? How do you use them? We're going to break it down, show you some examples so you can better utilize Fibonacci retracements. If you're new to the channel, please hit that subscribe button. Join the Trading Learning 101 community where we all grow as traders and investors. And if you're interested in more Fibonacci videos, I have a Fibonacci playlist that I've created, and I will leave that description down in the video description. Feel free to check it out and check out the many other playlists that I have created on the YouTube channel. So without further delay, let's jump into the wonderful world of Fibonacci and retracements. Once again, we got our trusty friend up here, Investopedia, and we're going to look up the definition for Fibonacci retracements. What is Fibonacci retracement? And where do its ratios come from? A Fibonacci retracement is a popular tool among technical traders. It is based on the key numbers identified with the mathematician Leonardo Fibonacci in the 13th century. Fibonacci's sequence of numbers is not important as the mathematical relationships expressed as ratios between the numbers in the series. In technical analysis, a Fibonacci retracement is created by taking two extreme points, usually a valley low and a valley high, or a valley high to a valley low. You take those 2 points, a low to a high, on a stock chart, dividing the vertical distance by the key Fibonacci ratios of 23.6%, 38.2%, 50%. Even though 50% is not, or 50 is not a Fibonacci number, they include it in the retracement because a 50% retracement is very popular amongst traders. A stock makes a move from $1 to $2. If it pulls back 50% to $1.50, a lot of people look for a good bounce at that area, so they include it in the retracement. The golden ratio of Fibonacci is the 61.8% level. You'll see a lot of times with retracements, Fibonacci retracements, the 61.8 level be a key area to keep an eye on. And 100%. Once these levels are identified, horizontal lines are drawn and used to identify possible support and resistance levels. Key takeaways from Fibonacci retracement. A Fibonacci retracement is a popular tool that traders can use to identify support and resistance levels and place stop loss orders or target prices. A Fibonacci retracement is created by taking two extreme points on a stock chart and dividing the vertical distance by the key Fibonacci ratios. Fibonacci retracements suffer from the same drawbacks as other universal trading tools, so they are best used in conjunction with other indicators. I personally don't use Fibonacci retracement with other indicators. I don't even really use indicators. I'm a momentum Fibonacci trader. This is why I'm creating these Fibonacci videos for you guys, to give you a glimpse into my trading strategy and how I like to look at charts. What I do use though is multiple Fibonacci tools, Fibonacci arcs, fans, projection, retracements, and moving averages based on Fibonacci. And if the stars align with most of those tools that I use, the better conviction and more confidence that I have to take a trade. Now that we got the definition of what Fibonacci retracements is, let's look at some examples on some charts. To get this out of the way, what I like to do when playing around with Fibonacci retracements, if we have a stock that's gapping up pre-market or has a big morning spike, what I personally like to do is measure the move like we have on SPCE right here, getting this nice little run up to almost $16. What I will do is I will measure from the previous day's closing price all the way up to the day's high. And then when the stock starts to retrace and pull back, I'll look at the retracement levels here on the left side to see which level it could potentially bounce or reverse at. So we have our Fibonacci retracement drawn from the valley low of the previous day's close up to the day's high here at $16. Here's our Fibonacci retracement levels right here. And what I want to point out is as this stock made its way all the way down from $16, and if we draw a line right here at the golden ratio of the Fibonacci retracement, 61.8, this level right here, we got two really good bounce from this level right here at 1525 up to 1550, and then another good bounce right here at the golden ratio with another good bounce right there. Then the stock fell through it right here, and now it's all acting as resistance, as you can see right here. Let's take a look at another example. We're going to look at a 10-minute chart on ticker symbol TLRY. We're going to get our Fibonacci retracement tool, and we're going to measure from this valley low right here all the way up to this high up at 10.6. You could see once the stock topped out up here, it pulled back to the first Fibonacci level here at 23.6%. Came down, ran through the 38.2% retracement. And what I really want to point out with this is this right here. This bounce at $6, bouncing up all the way to $8. And look at right where it bounced at. The 61.8 Fibonacci level, the golden ratio, at $6. Finding this level just from doing Fibonacci retracements. Now, I may get this question in the comments. How do I know which low to measure from up to the high? That's when we'll get into Fibonacci clusters, but I'll make that for another video. I'll get started on that one right after I get done making this one. To sum it up with Fibonacci clusters, it's a bunch of measurements from valley lows up to a high to see a specific level. Same thing from a high to valley lows. Let's take a look at another example with ticker symbol MRNA on the 10-minute time frame. And keep in mind, the bigger time frame that you plot the Fibonacci retracements, the more powerful it could be. So for this one, we're going to measure from the valley high up here at 3450 down to the low here at 2440. Once we measure from that high to that low, the first thing I want to point out, the golden ratio level, 61.8, at $30.67, acted as resistance right here and right here from these lows right there. The 61.8 level is the most important number in the Fibonacci retracement. But from that measurement, from the high up here down to the low, you can see that the stock really moved through these Fibonacci levels quite well. From 0% down here at the bottom, stock moved its way up through the first level right here at the 23.6% retracement and was holding as support, and the 38.2% was acting as resistance, and it couldn't even really hold over it. As you can see, it pops up over it right here, falls back down below it, and then it finally gets up and above it. And look at right where it runs into. Resistance right at the 50% retracement. Then it gets over it and is holding all right here and pops right up to the 61.8 level. It's all about how you look at it. This isn't a science. And if you're using Fibonacci tools, you have to look at it as an art. It's not going to be perfect, but you will see it work a lot of times. And it's all about how you look at the chart as a trader and an investor. I don't rely on these tools, but I use them to help guide, to paint the picture of the story the stock is trying to tell me. Fibonacci has a huge cult following, and this is why I see Fibonacci work a lot in the stock market. Just like any other trading strategy that's out there. You have your Elliott wave theorists. You have your investors and traders who believe in Elliott wave. That's one cult following. You have your Fibonacci traders. That's another cult following. You have your investors and traders that believe in the Dow theory. This is why technical analysis works. It's a self-fulfilling prophecy, and it's all psychology. All right, we'll take a look at one more chart here to demonstrate an example, and we're going to look at GPMT 10-minute time frame again. We're going to get our Fibonacci retracement, and we're going to measure from the low right here all the way up to this high at around $9.50. I see immediately the stock did try bouncing at this first level. The 23.6 retracement had a little fast pop on it and then failed, held as resistance right there, dropped all the way down to the next level, was just in and out like a trampoline, bouncing off that 38.2 level, and then having a death candle all the way down. And look at this, is almost perfect right here at $5, a mental price level. The golden ratio 61.8, and from 5 this bounces up to $6, and the 50% retracement for a nice little range right there, back and forth from $5 up to $6, back and forth. Remember when I said the 61.8 retracement is the most important level in retracements when using Fibonacci? The past few charts that we've looked at, most of them all played around a lot at the 61.8 level. And again, we'll get into Fibonacci clusters later. I'm excited to show you guys that one, but for right now, we're just going to focus on Fibonacci retracements, get a better understanding of Fibonacci retracements, and show you some examples of the basics before we get into the more technical tools of Fibonacci. And just for the heck of it, we'll do one more chart here on OXY. Again, 10-minute time frame. I'm showing these all on 10-minute time frames. Fibonacci retracements work on many different time frames. You could plot them on any time frame that you want. For this video, I'm just making them all on the 10-minute chart to give you a better, clear example, but you can use Fibonacci retracements on any time frame that you would like. So let's get our Fibonacci retracement, and we're going to measure from this low at $9.50 all the way up to the high here at $15.30. And immediately, what I want to point out, stock played around right in this range right here, the 50% retracement and 38.2 retracement. And look at this, the golden ratio 61.8% right there. Stock came all the way down to it, bounced almost perfectly right off it at $11.50 and bouncing up to $12. Came back down to it, failed, got a big death candle, fell all the way down to right here. And when the stock came all the way back up right here, found resistance right at that golden ratio, the 61.8% level. Retraced, bouncing on support right here at the 76.4% retracement, and now in this area right here, the 61.8 retracement is holding as support once again, right in that area. So going back to what I was saying before, it's all about how you look at the chart when using these Fibonacci tools. Remember, it's an art, it's not a science. Have fun with it. You're gonna have people say this is the correct and only way to use Fibonacci. You can use Fibonacci really however you would like. Just keep in mind, always try to measure from valley lows to highs and from highs to lows. Keep an eye out for the next Fibonacci video, Fibonacci clusters. And if you want to see more Fibonacci videos, be sure to check out the Fibonacci playlist that I've created. I will leave that link down in the video description below. Check it out. If you don't know much about Fibonacci and want to learn more, Be prepared to be blown away. Fibonacci is around us in our everyday life, whether you believe it or not, from Mother Nature, space, architects, buildings, the length of your arms, hands. It's everywhere. If you're new to the channel, hit that subscribe button. Join the Trading Learning 101 community where we all grow as traders and investors. Leave comments down below. What did you think of this video? What are some of your favorite Fibonacci trading tools? And how do you use Fibonacci in your trading strategies or trading style? That's going to wrap it up for this video, everyone. I hope you enjoyed it. And until next time, have that patience, have that discipline, and study, study, study. Later, everybody.
The most valuable commodity I know of is information. Wouldn't you agree?